Rob Warriors, Jimmy Vercellino here, United States Marine Corps veteran and your very own highly motivated, truly dedicated, producing branch manager and trusted advisor specializing in VA loans. Good to go? So here's what I wanted to talk with you about today. I wanted to talk with you a little bit about VA loans and refinancing. All right, so since I'm asked these questions so often, I think it's important that we spend some time together briefly and discuss how it works. Good to go? But before I do, I wanted to ask you a favor. If you find that this information is valuable at the end of this video, and if I've earned it, would you consider showing your love by hitting like and subscribing to this channel and commenting down below? By doing this, I'm able to help educate more veterans and active duty service members about how their VA home loan benefits work. All right? Sound like a win-win? Good to go. Let's get started. So, VA loans and refinancing. Here's what you need to know. There's two types, all right? So if you're sitting at home right now, say two types. There you go. All right. Two types of VA loans and refinancing. The first one is something called a VA cash out refinance. The VA considers a cash out refi when a veteran is moving out of an FHA loan, conventional loan, and moving into a VA loan. VA considers that to be a cash out refinance, all right? So it's important that you know that. The other type of cash out refinance, when we hear that word, we think we're pulling equity out of our home, okay? So the VA allows us as veterans to pull up to 90% of the home's appraised value out in equity. Now, that money that you're pulling out of your home can be used for really anything and everything that you want. You can use it to fund a remodel. You can use it to pay off high interest rate credit card debt. You can use it to put your child through school. Again, it's your money and you can use it for whatever you'd like. Now, the requirements for this are the same. You have to have the minimum credit score requirements that your mortgage lender would need. In addition to that, your house has to appraise, right? You still have to have the income qualification and everything that you would on any other regular VA loan. Good to go? So if you have more questions about the VA cash out refinance, make sure to just comment down below and I will personally answer that question for you, okay? Now, let's take it one step further. The VA IRRRL, all right? A lot of my veterans will call me and they'll say, Jimmy, I'm getting this stuff in the mail and it says that I can refinance my mortgage, I can drop the interest rate, and I can do it with no out-of-pocket expenses, and it's going to be free and everything like that. So before you move forward on one of those, it's important that you check in with a mortgage advisor who specializes in VA loans and can walk you through exactly what it is that you're looking at, because sometimes, you know, I think of the objects in the rearview mirror are closer than they appear. Like sometimes those things that you get in the mail aren't what they seem to be. All right. So the VA IRRRL, all right, interest rate reduction loan, that is simply when a veteran has an existing VA loan and now they would like to lower their interest rate or change the terms on their VA loan. Now, what the VA allows us as veterans to do there is lower the interest rate with no appraisal. In some cases, remember, it's important to check with your lender to ensure that they can do this, but lower the appraisal, one, and two, do it with none of that other stuff that you provided the last go around, like income documents, tax returns, W-2s, 1099s, Social Security award letters, and these types of things, okay? So again, it's allowing us as veterans to lower our interest rate, roll all of the costs that are in conjunction with the loan into the loan, so no out-of-pocket costs unless you choose to do so. And then lastly, save you money by reducing that interest rate in the form of a monthly payment. Now, that's great, right? You're saving some money every month in the form of a mortgage payment. But what you have to understand is that the VA has a requirement on there that states that it has to be a 36-month break even. In other words, the costs that you're rolling into the loan, you can't have greater than a 36-month break even. And if it doesn't, or if it's higher than that, the VA is not going to let you do the loan. So what do I mean by break even? Here's what I mean. Okay, think of a refinance as an investment. All right, if you're rolling costs into the loan, that it's an upfront investment, right? So if you're putting that money into the loan, it's going to take you time to get your investment back before you start making money, right? And that's what the VA says on a refinance. You can't exceed a 36-month investment. It has to be on or before that 36 months, all right? Does that make sense? So if you have any additional questions, if it doesn't make sense or you have a follow-up question, just remember that you can comment down on this video below. And if I've earned it today, would you consider showing your love by hitting like on this video and subscribing to this channel, so that way we can educate more veterans and active duty service members about their VA home loan benefits, all right? My name is Jimmy Vercellino, producing branch manager specializing in VA loans. If you have more questions, you can always roger up with me by going to my website at VALoansForVets.com. That's VALoansForVets.com. All right, so thank you for your service to our great country, and I'm sure we'll be in touch real soon. Take care.